Life insurance is a way we can provide for the people we care about so that they can still have their lives you want them to have. As we grow older, get married, build families, and start businesses, we come to realize more and more that life insurance is a fundamental part of having a sound financial plan. Here are a few reasons why having a life insurance is important. Since your family is dependent on you, if you were to die, your family financial security is at risk. You will need life insurance to protect your family. Should you die, the life insurance proceeds will help you keep the promises you have made to the people who are important to you, such as spouse and child. If you are a breadwinner or have a stay at home spouse, life insurance helps in replacement of lost income. It will help pay undisturbed cash flow for ongoing living expenses. If you if your family is having a baby and if you die, life insurance will give your spouse some time to find work. Next one is estate planning. When someone passes away, their heirs often face estate and inheritance taxes on assets they receive. If you are worried about your loved ones getting hit with a big tax bill, a life insurance policy can help cover these added costs. The best example is Joseph Robbie, founder of the Miami Dolphins football team. Because of poor estate planning, his family has to sell his team, the stadium Robbie built with $115 million of his own money, to pay a huge tax amount on estate shortly after he passed away in 1990. I think the tax amount was $45 million, I guess. If you have a medical practice or some business with two partners, your death could put business future into uncertainty. To make the transition easier, you can work out a business continuation plan which will tell what happens to the business when one of the partner dies. Here, life insurance helps pay off other partner's portion in case of partner's death. In case of a single parent, life insurance ensures children are taken care until adulthood. Their college fees is taken care. In case of a divorced single homeowner with no dependents, life insurance can cover final expenses or provide proceeds to charity. We can't know when we will pass away. It could be today, tomorrow, or 50 years from now, but it will happen eventually. No amount of money could ever replace a person, but life insurance can help provide protection for the uncertainties in life. Without a doubt, having life insurance coverage will bring you and your family peace of mind. It's one thing you can be sure of, and you'll no longer have to question whether they will be taken care of when you are gone. There are several other scenarios we can talk about, but I think I covered. Hi, welcome back. In this module, we will look at how much life insurance do you need. Life insurance policies aren't one size fits all. Have you ever been on a camping trip where you had to buy supplies? You had to buy food, snacks, water, all that good stuff, but you're not sure how much to buy if you have never done it before. When it comes to buying life insurance, it can be equally confusing. How much life insurance do you need to buy, and how long do you need to buy it for? In 2014, somewhere in Silicon Valley, a billionaire has taken out $201 million in life insurance. That sounds like a lot, right? I gave you this example to show the limits of life insurance coverage. If you want more, you can get more than $201 million. For most people, different times in their lives may require more coverages than others. There are many rules you can follow. One common rule is to take your income multiplied by 10, and that's how much life insurance you should buy. For example, if you make $50,000 a year and multiply that by 10, you need to buy $500,000 worth of life insurance coverage. One thing I would have you consider is this. If you are young and you are making $50,000 a year, chances are that you are going to be getting raises through the years and maybe your family is going to be growing. As your family grows and your income grows, you are probably going to buy more life insurance. I know for me personally, I first started with a $250,000 life insurance coverage for a 15-year term policy. That's when I was just newly married. I now have two children, so my level of responsibility has grown, and so has my life insurance coverage. Now I have over $1 million life insurance coverage. That might sound like a lot for many of you, but keep in mind, I have got two kids, I've got the mortgage, I just want to make sure they're all taken care of in case if something happens to me. Don't feel that you need to buy that amount, but using the 10 times rule of thumb is a good place to start. However, most follow DIME formula to calculate the coverage amount. DIME stands for debt, income, mortgage, and education. Let's see how. Um, let's see the formula of DIME. First is debt. Add up all the outstanding debt, such as student loans, personal loans, car loans, credit card debt, etc. Next is income. Estimate your income, which includes your spouse as well. Next one is mortgage. Add remaining balance on your mortgage. The next one is the children's education. Add up the amount needed for children education. Let's do a simple math on DIME. Assume I have $100,000 in loans and other debts. Income is $500,000, which is $5,000 per month or $60,000 per annum into 10 years. Mortgage balance is $300,000 and education for kids is $100,000, and I'm assuming $10,000 per year for a 4-year college for two kids. So DIME equals 1 million life insurance. So in this case, you will need 1 million life insurance coverage. A lot can change on where you live, what you want, your occupation, your needs, etc. Children with special needs will usually have higher expenses and need more financial help. If you are in your 20s, 30s, or maybe even early 40s, then chances are that you are going to be living longer. Here is a beautiful chart from Guardian Life showing how much is needed based on your age. If you are between 18 years of age till 40, you might need 30 times income coverage needed, assuming you will get married and settle down, purchase a home, and have children. 41 to 50 age group, 20 times income. Here, you might need to pay for children's college education expenses. 51 to 60 age group is 15 times income. Here, we are assuming kids are independent, mortgage is paid, and have no other expenses. 61 to 65 age group is 10 times income. Here, maybe we are able to provide funds for final expenses, retirement income for spouse, etc. Finally, coverage needs to drop to a lower level. At this stage, you are trying to leave financial